Hey, welcome to the TMT channel. I'm your 10-minute teacher. I'm a chartered accountant who makes under 10-minute videos to explain all accounting concepts of class 11 and class 12. In today's video, we are going to learn about journal, the rules of debit and credit, focusing on the modern approach or the C.L.E.A.R approach. If you want to learn about the traditional approach, I have prepared a separate under 10-minute video for that. Let's start. As per the double entry bookkeeping system, every transaction has two effects. There is a debit effect and there is a credit effect. But how to identify debit kya hai and credit kya hai? For that, we have two approaches, traditional approach or modern approach. In this video, we'll be covering the modern approach. Before understanding the modern approach, we need to know of a term called C.L.E.A.R. C.L.E.A.R. Now, what does this C.L.E.A.R stand for? C stands for capital, L liability, E expense, A asset, R revenue. Now, let's understand each of these terms briefly. Capital is nothing but the owner's contribution in business. Liability is the money business owes to outsiders, such as bank loan, creditors, unpaid expenses, etc. Expense is the business ke kharche, such as purchases, wages, salary to employees, rent, insurance, etc. Assets are the valuable properties business owns, such as land, building, investments, debtors, cash, stock, etc. And lastly, revenue is the income of the business, such as sale of goods, interest received, discount received, etc. If you have any doubts around what these terms mean, there is a separate under 10-minute video of basic accounting terms that explains all of this in depth, in detail. Check that out. Now, continuing with modern approach, C.L.E.A.R तो समझ गया. What C.L.E.A.R stands for ये भी समझ गया. But अब करना क्या है? Let's focus on the vowels. E for expense and A for asset. If vowels increase, it will be debited. And if vowels decrease, it will be credited. Now, why am I focusing on the vowels so much? It is because everything else is ulta. What I mean to say is, for C, L and R, increase is credit and decrease is debit. Please take a screenshot of this slide. It will help last minute revision. This entire video is about how we will apply the rules of modern approach to identify debit and credit. Let's try that with the help of an example. First, Dhirubhai started business with cash rupees 50,000. The two accounts that will be affected because of this transaction are cash account and capital account. Cash is an asset. When business is being started, cash increases, so asset increase is debit. Simultaneously, when business is being started, capital increases, capital increase is credit. This is how we will do for each transaction. Second, purchase goods from Mukesh rupees 20,000. The two relevant accounts here are purchase account and Mukesh account. Purchase is an expense. So when you purchase goods, expense increase is debit. Likewise, Mukesh is a liability because this is a credit transaction. The business owes Mukesh 20,000. So, liability increase is credit. Transaction number 3. Sold goods to Anil for cash rupees 30,000. The two relevant accounts here are sales account and cash account. Sales is the business revenue. Revenue increase is credit. And when you sell goods, cash comes in. So, cash account will be debited because asset increase is debit. Fourth transaction. Purchase machinery from Tata for rupees 15,000. The two relevant accounts here are machinery account and Tata account. For the business, asset, machinery increases. Therefore, asset increase is debit. Machinery will be debited with 15,000 and Tata is nothing but a liability that is created because of this credit purchase. Liability increase, credit. Lastly, paid monthly rent to landlord Neeta rupees 5,000. The two accounts here are rent account and cash account. Rent matlab business ka kharcha, expense increases, debit, and if you pay rent, cash reduces, so asset decrease is credit. That's how we've learnt the modern approach better by applying the rules of debit and credit based on C.L.E.A.R. Let's understand this even better with the help of a practice question. But wait, are you enjoying this style of learning accounts? If yes, learn each chapter with me. I'm conducting a chapter-wise crash course in Jan-Feb 2024 right before your exam, ताकि last minute preparation is 100%. No need to pay for the full subject. Pay only for the chapters of your choice at a reasonable ₹199 per chapter. Join my Telegram group for updates on the crash course. You can scan the QR code in front of you or click on the link in the description below. Now, let's come back to the practice question. 2 instructions before we start. First, pause the video, read this question at your pace, and then join me in the solution. And second, do not attempt to solve this question with me. मेरे साथ सब concepts and logic समझ जाओ, then sit by yourself and solve it खुद से. ऐसा करते करते mistakes and doubts सामने आएंगे. And you can always fall back on my video for all clarifications. So, let's start. We are supposed to classify the following transactions into debit and credit under the modern approach. Let's start with the first transaction. Withdrew cash ₹60,000 from bank. The two relevant accounts here are cash account and bank account. If you withdraw cash, which is an asset increases, therefore debit, and money is withdrawn from the bank. So bank balance reduces. Bank balance is nothing but your asset decrease, credit. Next transaction. Paid Ratan, a creditor, by check ₹10,000. The two accounts here are Ratan account and bank account. Ratan is nothing but a creditor, which means he is a liability, and if you are giving him a check, you are reducing the liability. Liability decrease, debit. And bank account is nothing but an asset. If you are giving someone a check, bank balance reduces, so asset decrease is credit. Next, received interest on investment ₹5,000. The two accounts here are interest received account and bank account. Interest received is our revenue. Revenue is increasing, therefore credit. And if you are earning money, bank balance is also increasing. Asset increase is debit. Fourth, spent ₹2,000 cash for office expenses. The two accounts here are cash account and office expenses account. Cash is reducing because you are paying for expenses. Asset decrease is credit. And next, office expenses are obviously expenses. Expense increase is debit. And lastly, the proprietor withdrew ₹4,000 for personal reasons. The two accounts here are drawings account and cash account. Drawings is the proprietor taking money out of the business. So it will be treated as capital decrease. Capital decrease is debit, therefore drawings will be debited. And secondly, if money is taken out of the business, cash, which is an asset, reduces. Asset decrease is credit. I hope you've followed the modern approach. Now, I've covered the entire journal by subdividing it into 4 under 10-minute videos. Check them all out for a thorough foundation in journal. See you.